Hey team, good afternoon. Happy Tuesday. Happy turnaround Tuesday. That was awesome, right? It's a good turnaround. Everything kind of was a perfect storm of everything coming together for that bounce we had today. The MT was super low. It's turnaround Tuesday. We were super overextended on the downside, and we had the Fed meeting, so people are getting set up. And today was mainly was a probably a short covering rally. So there were a lot of shorts out there, that wanted to like get out of the way for the Fed meeting. So that helped a lot. But either way, I don't care the why. I just got the how. I just got the what, which is we got a big up day, and I was able to take profits on everything I put on the previous day, just like I mentioned to you guys. There was a lot of profits to be had if we had that bounce, and everything was the probabilities were showing that we had that bounce coming. So that played out nicely. Before I get started with everything, I just wanted to kind of reiterate the point about having stops. USO, I had this trade on, and I put it on, and I said, okay, I'm going to leave it until it crosses the 21. It breaks that down, and I had the alert set, and it did, and I sold it, this day right here. Look what happened today. Another 4 points down. So adhere to your stops. Once you have a stop and you have a plan in place, execute it. Let it work. I could have said, I saved myself easily another like, I don't know, $500, $600 probably of losses if I would have kept this, because I had a couple hundred shares. I had two contracts, but they were equivalent to a couple hundred shares. So let's say it went down 4, my options would have gone down like, let's say 3 or 2.5. Let's say $500. So that's a material amount of money like that I saved just because I honor my stop loss. Okay, so honor your stop losses. Another one that I want to show you that's kind of working that I gave you guys right here. This is a good entry right here. Boom, Zim, up another 270 today. So Zim's working. It's all obviously a little bit extended. So wait till it pulls back. They all pull back. They eventually pull back. So maybe at the 21, we could pick it up again, which is the 21 should probably meet somewhere here at the $80 range, and then have another setup here. All right, so the market today had a nice bounce, but hey, like I've been saying, look where this one came to, the 9 EMA, and what happens the next 2 days? Huge down days. What did this one come to? Right to the 9 EMA. Look at it. Boom, boom. It went to the low. It validated this lower trend line, and then it reversed all the way up, and it ended up right there. Now tomorrow's the Fed meeting, so like I said, I'm expecting this, and I'm expecting this. Now, which one comes first? I don't know, but there will be, even if it's just like a minute or 2 or 5 or 10, there will be a whoosh, and then there'll be a whoosh, and then possibly another whoosh, or a whoosh down, then up, then down again. But there will be whooshes. You're gonna see big candles. If you go to the 15 or 10-minute chart, you're gonna see, or half an hour chart, you're gonna see big candles on those charts. And you can just mess up. There'll be a lot of volatility. So that's why today I wanted to wait till like 35, 45, 50% gains on some of the ones that I closed, but since tomorrow is the Fed meeting, I wanted to kind of like reduce some exposure. I still have about 120 long delta in the portfolio. I had about 250 coming into today, so I cleaned up, a good 35% or 40% of my positions just to secure some profits. I have no idea what's going to happen tomorrow. I doubt it. I seriously doubt that the Fed's going to increase by more than a quarter, because that's what the market is expecting. So that's already priced in. If they do half a point, 50 basis points, the market's just going to go berserk, and we're going to probably lose about $400 on the Nasdaq and 75 points on the S&P. If they do the 25, it'll be pretty much maybe one of these jobs, and then status quo, because that's already expected. Or you might get a continuous little bounce. 2 reasons. One, because it was expected, so there was no surprises. So the market likes that. The market doesn't like surprises, so that's a positive sign. So that should give it a bump. And 2, seasonally, like I mentioned in my post, the last 2 weeks of the quarter in March, normally you have some positioning with the institutions. So if we have like a big move up, usually like the last 2 weeks we have a little down profit taking. If we have a down movement, maybe the last 2 weeks we have a little profit take, not profit taking, buying to make the quarter look a little bit better on their report. So there might be a little rally going into April, which we'll take. So that there and then if the Fed only does a quarter, should give us a nice little bump, and we should have a nice little rally again tomorrow through the end of the week. And if that's the case, well, the ones that got left are going to work just perfectly fine. I'm going to make a little bit more money on those as well. I might take some breakouts here and there just for a very, very short trade, like 5, 7, 9% gains. You can't hold them too long because the market is so volatile; it just moves around so much. I don't want to give back gains. Back in this little chart that I kind of sent a picture to you guys. I mean, that worked out beautifully, right? I had this little trend line here. I had this here. I believe I had this here. So what I saw was, what I was pointing at was we had this downtrend and we had a pop up, right? Normally when you have a wedge like this, then this wedge breaks down and you go down. But what happened was, that's why I had two arrows here. If you go back to the picture and study it, I was kind of saying, hey, this didn't really go down. It kind of held in a little flat little, what's called a bull flag pennant, where you have an up move and then you have a consolidation kind of slanting down a little bit like a flag. If you had it going up, then this would definitely go down. But since you had it going down, it's kind of like, it's really a cup. If you look at here, it's a cup with a handle. That's what it is. So this handle part right here is a nice bull flag pennant, and normally it works itself to the top side. And I had this little trend line right here, and I have my arrow saying this is what I'm expecting, guys. And what did we get? We got this. Woo! Technical analysis 101. This is just telegraphed. I mean, I saw this coming. Again, I don't want to sound cocky that I saw it coming, that I knew. I don't know anything. The probabilities were that this would do this rather than fall over. Okay, that's what I mean. When I say that, I mean that it's a higher probability that this would have worked out, and it did. So we did good. So what's gonna happen tomorrow? I have no idea, because now I have no edge. I have no setup. I have no pattern. I don't have anything. When you have a pattern, you have a nice little cup here. You have a nice little handle, and then it fakes you out. It takes off the other way. We could do the same thing, kind of thing. It fakes you out, and then tomorrow it does this. We have no idea. That's why I took profits today. I take profits into strength. I don't just sit there like a pig and wait for make 10,000% return. If I can make 25, 35% return on a short put in a day, hey, I mean, take it. I still have a little bit, so if tomorrow we continue to go higher, or if we stay flat in the morning until 2 o'clock when the Fed announces, and then we have a pop, we're gonna have pops, and we're gonna have like I said, we're gonna have big candles. We're gonna have a lot of emotional transactions going on, and then it'll settle into whatever the trend is going to stay at, whether it's going to be falling, or we pick up and then we take off a little higher, and we might come up to the 21 here, and then we got to clear this resistance here. If we have a nice little pop here, we might fall over again, or we might hit his head and then break it and then go a little bit higher. We still have to deal with this death cross. We still got to get through the 50. We still got to get through this trend line. We still got to get through this trend line, and then eventually these big boys up here. So there's a lot of work to be done here. So, but hey, short term, day by day, we're doing good. I hope you guys took some profits on the setups I gave you yesterday. If you didn't, not sure why. Okay, so these are the ones that I had today. MUR. MUR. Okay, this is okay. Oil overall, energy has been beaten up because this rotation into tech, and the Nasdaq has been doing good. So energy has been selling off, and we've been if you notice, I mean, I'll come back to this. Look at the ones that I had on from yesterday. Google up 65 points. Took nice profits on that. I had Amazon up 110 points. Remember, I had it down here. Took some nice profits on that. Microsoft up 10 points. Took some nice profits again. But they're all coming up to a 21. Again, this is not any way or shape me saying that, okay, we're in the clear, now Microsoft's going to go to 350 again. No. I'm sure it's going to hit its head here. It's going to bounce around. It's going to come back a little bit. But for what I'm saying, for the trade that I had on, I positioned myself for today. I saw today the probability of going higher much likelier than continue lower like we did yesterday. Hence, I put myself in a position to take advantage of a pop. And I didn't buy stock because I didn't know what was going to happen. I didn't know they were going to go up 10 points, Amazon 100 points. I just didn't want them to go down, a lot. As long as they stay flat, I could have made money as well. But since they went up so much, I made a little bit more. Mara. Also, again, it's a $22 stock, so I have a point. It's still almost 5%. So, I have the 17 right here. So, as long as it goes to 20, I'm solid. Datadog. Up $2 today. Again, took profits because it's way below the 50, the 20, 200. So it was just a trade for setting up myself for what the probabilities were that was going to happen today. Apple. Nice $4 up today, holding this 150 level pretty nicely. That's why I sold the 145. So that worked out good. And what else did I have? CMG, Chipotle, up 21 points today. I have the 1300, so I'm solid. I'm still holding it because I couldn't get out of the. It wasn't. The spreads are really wide in this stock. It doesn't trade that much, that much volume. So the spreads and the options are really wide. So that's why I did it as a vertical to make sure I don't get screwed on either side. It all kind of balances itself out. So they're not as liquid, so it might take me a little bit while to get out of it. I probably won't trade Chipotle again just because again it has hardly any volume. But it's working and profitable on it. But basically everything was profitable. And the other one I put on today was Square because it was up 8 points today, and I sold the 135. I just don't see Square going past that. It topped its head at 131 at the 50. The 50 is now here, so I'm expecting the same thing for it to top its head here and then fall over again. Or even if it goes higher, this right here, people that didn't sell here are going to say, "Oh, second chance. Let me get out. And it's going to push it down again. So 135 should be pretty safe. Again, so I should be able to make maybe $300, $400 on this in a day or two, which is about 40% of my risk, of my capital risk to make this trade. So that's why I made that trade on Square. I was going to do Facebook as well, but the premium wasn't there. I was going to sell it to the 220, somewhere up here to 20. Look at this. This is just beaten down so much, so bad. It's it's up 5 points today. It's still not even to 200. So I was going to do it, but then it's the premium wasn't high enough. I wasn't going to get enough ROI on my risk capital. So I was like, I have enough exposure, especially for tomorrow. So everything was pretty good today overall. So back to the ones that I was seeing as potential setups. MUR 37.17, 37.17. All has been beaten down, but these are I saw 10 or 12, but I picked only a handful that I saw that were holding pretty nicely, either on the 9 or the 21. Look at this. It's holding the 21 super nicely here. It had the 50. and then look at it. It held it, it held it, it held it. So if it breaks right here, I'm a buyer. I might go to 40. So 37.17 MUR. COP, another one that's pretty strong. 96.10. This is for the century play. You know, trying to hit 100 here. See how what I always tell you guys? It goes to 102, 103, and then it comes back again. You know, it breaks 95, it goes to 100, 102, and then it comes back in again. This is classic. I mean, it's just, it happens over and over. And once you have experience looking at this, it's like you see it over and over and over and over again. So COP 96.10. I wanna clear you know, this little pivot and this little line right here, 96.10, and then try to, you know, play it for like 101, 102, and then put a stop right underneath 99 and secure a profit. And then if it keeps on going, for a trading stop. COP. HAL 35.61. 35.61. Again, same kind of concept. Look how it holds to 21. Right here. It holds it nicely. It held it today. It was down 4% today, and it just didn't violate it. So I want to clear right here, 35.61. If it takes off this high, you know, make a play at 40. If it, you know, if it continues, you know, grinding higher. You know, once it does break, if you could see, it writes the moving averages pretty nicely. So you can kind of play them up until the break. You know, look at here. It writes it, and then once it breaks it, then you get stopped out. Let's say you got stopped out right here, and your entry was right here at 21. You know, you got a 5-point move on a $20 stock. That's a pretty nice return. Same here. You got it at 24. You probably got stopped out here. You got back in here. That's, you know, that's a good move. And the same thing here. If you picked it up here, you probably wouldn't get stopped out until like here, 32. You picked it up at 29. That's 3 points in, you know, a week. That's not bad. You know, again, these are low price stocks. So 3 or 4 point moves on a $30 stock, it's like, it's a 10, 12%, you know, gain. That's pretty damn good. If you do that in 15 days, that's more than 300% return a year. I mean, I'll take that any day. HAL, WLL, 80.01, 80.01. I had a trend line here that it broke. I reactivated it because it kind of went back inside, and now it's hitting its head over again. So this is in play again. So 80.01. If it breaks 80.01, we might take it to 85 again. Again, held the 50 nicely. I like that how it just pinned it right there. Just like it pinned it here, and it kind of took off a little bit. Once it breaks it, it breaks it. But here it pinned it. So our stop is like right here. Well, no. Let me retrace that. If you would have taken it, you know, on this little entry base, and you would have gone here, your stop would have been the 50. But if you take it at 80.01, your stop is like right here at 79, 78. Obviously, don't take it all the way back down to like 70. Okay? WLL. NUE. 136.42. 136.42. I want to take out this high right here. I have a diagonal trend line here, a little cheat entry, holding the 21 real nicely. Real nicely, holding it right here. Here, it held the 50, and it kind of, once it broke out, it took you from like, you know, let's say 130 to 140. So maybe we can get, you know, 136 to 145 or something like that, eventually 150. So, you know, great numbers, great numbers. Top industry group, great growth next year. NUE. RS. 192.05. 192.05. Take out this high right here. It's building a nice little shelf right here. It's not even at the 21 yet, so it's holding it high, it's holding it tight. I like it. You know, I mean, if you take this break right here at 171 or so, you probably would have held it, you know, up to 180, taking some profits here, and then you got stopped out probably somewhere in here, maybe at 175. I would not have let it run trip me back to a loss. Obviously, never let a winner turn into a loser. So if it goes from 171 to 180 right here, I'm taking profits at 179, 178, and then I'm stopping out at 174. So I'm guaranteed that, you know, a 7% winner. Same concept here. If you pick it up at 196, 194, 91, so 194, you know, right underneath here will be the stop. So you know, this could be a 200 play. If we got a 10-point move, that's not bad. It's got earnings in 44 days, so we've got plenty of times. You might build up some strength into earnings into the 200 to 10 range. RS. Joe, 54.27. 54.27 right here. Take out this high right here. Nice little, double top here. This was a double bottom right here. This is the first bottom, the double bottom, and then on a double bottom entry, your W, the middle one is kind of the break. So in this case, this was a one day wonder here. So I'm going with 54.27. Take out that one. It came back inside, but again, 21 held it. So that's showing strength. So if it goes back up again, I'll take it. Joe, J-O-E. And last but not least, BG. 11120. 11120. I want to take out this high right here. Boom. Again, holding the 21 real nicely. Here it held the 50. And then all the way on 21. This is the same kind of concept. I tell you guys. 96 to almost 100, comes back inside. Then he breaks it, he goes to 102, 103, 105, the same number I always tell you guys. And then it comes back in to 96. And then once it breaks that, it takes off to 108. I mean, I think I've said it like 17 times. That's what happens in this price range. You're just about to get to 100, so you break it, and then you fail. Then you go to the 102 to 105, 107 range, and then you come back inside to retest, and then the next one is a little bit higher. You come back a little bit, and then hopefully you take off. So we're playing for this takeoff right here. Okay. So in this scenario, look, we would have bought it at 97, we would have gotten at 99. Stopped out on the way back down. So 2-point gain there. We would have taken it at 100, we would have gotten stopped out at 103 on the way back down from 159. Got a 3-point move there. We would have taken it at 103.60. We would have gotten stopped out at 107. We got a 4-point move there. So 1, 2, 3. We would have had 4 trades with that trade setup of 100 that I always tell you guys. That trade setup could have made you maybe 15 to 2 grand from January to like now. In 2 months, you probably would have made 2 grand on $10,000 investment here. Notional value, that's 20% return in 2 months. 10% a month, it's 120% return a year. This stuff works, man. It works. Just follow the system, follow the plan, and follow the discipline and stay focused. Focus, discipline. So that was it. What I'm expecting for tomorrow, I'm expecting, like I told you, I'm expecting volatility. I'm expecting a lot of whoosh, whoosh, whoosh around the 2 o'clock range. Between 1 o'clock to 3 o'clock, you're going to see big bars. Okay, so try to stay out of the way. Don't try to catch a wave because you can get run over. Just stay out, stay clear. If I have profits if in the morning we have another 100, 120, 150 point move, and I'm at 35, 45% profit on the ones that I still have, I'm cashing out. I'm gonna try to liquidate as much as possible at a profit for the Fed meeting announcement at 2 o'clock. If we have a down day in the morning, that's perfectly fine because that's not going to stay down. We are going to have whooshes and we're going to have like volatility. So just be patient and let things play out. Okay? Just don't get run over. Be safe and don't have FOMO. Have a blessed rest of the day, and I'll talk to you guys tomorrow.